Good morning. Welcome to this webinar run by the South African Chamber of Commerce. I'm Sharon Constançon, Chairman of the South African Chamber, and I'm welcoming all the many participants from all over the globe that have come to join with us today. The world is very busy at the moment. Many people are Zooming around the world, and a number of people have been unable to make the event. So diaries not permitting, many people will be watching this webinar later, which will be up very shortly after the event. Welcome to the Governor of the Reserve Bank, Lesetja Kganyago. Welcome to our honoured space, and thank you very much for giving us your time. Welcome to Chris van Niekerk, Senior Independent Director of the South African Chamber of Commerce. We're here today to enjoy a conversation with the Governor, to gain from him his insights on the journey of the last 3 months and to understand the focus of the Reserve Bank in the months ahead. The format of today will begin with Chris having a conversation with the Governor. Initially, the Governor will give us a few words and set the scene in the beginning. Our social distancing is a little unusual, a little further than we would normally expect. We've got Chris in the UK at home, and we've got the Governor in South Africa at home. The Governor will then be taking questions from the floor. Please pose your questions on the Q&A facility that is live, and we will then pose those to the Governor, collating common questions together. You're not here to listen to me. Today's focus is about the Governor, and I'd like to hand over to Chris and Lesetja, Governor of the Reserve Bank at this point. Thank you very much.
Good morning, Lesetja. Good to have you with us. Thank you very much for making the time. It's obviously it's quite a critical time for all central bankers, and obviously for you as well. So we appreciate your taking a few minutes with us today just to talk a little bit about South Africa. Obviously, everyone on the call, with needless to say, is very interested in what's going on in South Africa, myself included. We're obviously facing very much the same, although not exactly the same challenges in Europe and in the rest of the world, but South Africa obviously had its own unique set of challenges and its own unique demographics and economic situation. So I think maybe we can start with you making a few introductory comments for a few minutes about how you see things and how you see the COVID-19 crisis playing out in South Africa.
Thanks, Chris, and thanks, Sharon. Indeed, very difficult times that we are facing. I need to say that we've talked about the past 3 months, but the truth of the matter is that South Africa faced the COVID crisis whilst we had just entered into a recession ourselves. So what COVID simply did was that it put further shocks on the South African economy. And the way in which we had understood the shock was that, firstly, this is a health crisis. And naturally, the first authorities to respond in South Africa were the health authorities. And I think that it was good that it was the health authorities who responded first, because elsewhere in the world, it seemed to have been that it was the central banks that responded first, and I'll come to that. COVID was seen initially as just a shock on confidence and on risk appetite. But it soon became both a demand and a supply shock. A supply shock because global supply chains got affected, and in most instances even completely closed. But it also was a demand shock via the confidence channel, and also through a knock on people's incomes. The natural response for many countries was to go into lockdown and put in social distancing measures, and this actually then exacerbated the problem, and it also led to a situation where people were posing a false dichotomy which said it's either people's health or it's the economy, which is in itself a very false dichotomy. Yes, it was about the health of the people, but the economy is also about people. Economy is there, it serves people, and economy is built by people. And so it is always a challenge for authorities to balance those two objectives. And the lockdowns couldn't last forever. And at some stage, it had to be relaxed. And the approach that was taken in South Africa was a risk-based reopening of the economy. Now, in this environment, it meant that there had to be responses in terms of policies. There had been a response from the health authorities, which was speedy, and we have seen that. Then there was a response from the monetary authorities and the fiscal authorities. Today, I will spend a lot of time talking about the response of the monetary authorities, being the central bank, and how we see that evolving. And what we had seen was that from a central bank perspective, we responded with an adjustment in the policy rate of 275 basis points from January. We had a modest 25 basis point adjustment in January, which was to react to the pending recession. And once COVID-19 hit us, we had to respond much more aggressively. What made it possible for South Africa to respond in this manner? We were able to respond in this manner because the central bank had built buffers and had a history of independence and was able to also use the credibility that we have in the South African policy space, but also globally, that the response of the monetary authorities was always going to be seen to be a prudent response. But we also picked up that there was a dislocation in the financial market. And because there was a dislocation in the financial market, we had to inject liquidity into the market. Firstly, by putting in additional repo facilities for the banking sector to meet their liquidity requirements. And secondly, by embarking on some bond purchases to facilitate the functioning of the market. And to be clear, we were doing this because we wanted the markets to continue to function rather than because we didn't like the price that we had seen in the market. We also provided regulatory relief to the sector by the South African banking sector has always been well capitalized with ample liquidity, and it had ample buffers. And we allowed them to dip into those buffers so that they could continue to support the economy. The fiscal authorities did respond with some fiscal relief measures, but they didn't have the extent of the space that the monetary authorities have. So that is where we are. But providing relief and that could stimulate demand is not going to work if the economy is in a lockdown. And so the measures that we had taken, the effect thereof will only be felt now as the economy reopens. And we will continue to monitor that, and we stand ready to deploy our tools to provide relief to the South African economy. So let me pause it there, Chris, and then we could then have an interaction.
Thanks, Lesetja. No, it's a challenging time for central bankers, and I think having lived through 8 or 9 financial crises, you've seen your share of unfavorable, very unfavorable conditions in the financial and economic markets. Is it possible to crystallize a little bit what the extent of the effect will be on the South African economy? I know it's a difficult question to ask because we're still in the middle of the COVID infection. But as you say, the South African economy was already struggling to some extent. I mean, do you have a feeling yet of how this is going to affect the South African economy, or is it just too early to say?
Well, it is too early to say, but we can already tell what the effects are. What we are not able to do is to attach a number to that.
Yeah.
We expect the South African economy to contract by 7% this year. Some people say that we are optimistic, but it is a forecast that we could go with given the evidence and the data that we have at the moment. It's like making policy in the dark, because even the statistical agency, SA, was under lockdown, and the figures that they are going to be releasing are going to have to be adjusted figures rather than the figures they would have normally released. And they had to delay the release of the gross domestic product number. So they would have had to delay the inflation, the publication of the inflation numbers. And from us as the central bank, one of the publications that is used is the South African Reserve Bank quarterly bulletin. The June quarterly bulletin will now only be released in July because we need to reconcile things with South Africa. But let me just paint this picture. What you have had under the lockdown was that people were restricted in terms of the goods and services that they could actually purchase. That meant that the retail sector could only be operating to provide what was deemed to be essentials. Understandably, very few people then were going to shopping centers to observe social distancing. That basically meant that the retailers were going to be struggling with rental, and they approached the landlords and they were asking for relief from the landlords, saying that, well, they cannot pay the renter, and which means that if they are not paying the landlords, if the landlords have bonds, the landlords end up saying to the banks, sorry, but I can't service my bond because the tenants are not paying. So
sure.
The property sector would be adversely affected. The financial sector too will be affected. The earlier indications that we had seen had been that financial activity was lower. During the lockdown, people were not swiping their credit cards. They were not withdrawing cash from the ATMs and so forth. So you would expect that would happen. If the retailers were struggling, that goes without saying that their suppliers are going to be struggling as well. But there are things. I mean, landlords are going to have to confront something. The kind of things that they have seen of very generous rental increases from 1 year to the next is going to be a thing of the past. Because as it stands now, with us, you in London, and we are able to converse like this, the question comes, well, why do I have to fly to London to come and meet you if we can do it in this manner? And similar questions are being asked as office-bound workers are able to continue working remotely. And there's going to be question marks about the amount of office space that firms actually require. So the property sector is also not going to be the same. But even as we open the economy, there are some businesses that might actually not make it in spite of the support that we are providing. And one of the support that we had to provide was that together with the National Treasury and the Banking Association, had to provide relief to small to medium-sized enterprises to take them through over the next 6 months and assist them with the cash flow. That means that the banks themselves would have had to make additional provisions, and we have to provide them with regulatory relief so that they are able to support clients in an environment like this.
I think those two sectors that you've highlighted there, Lesetja, are again in common across the world. Both retailing, clearly, because they just don't have the footfall or customers, frankly, coming into the stores, and the rental sector. I mean, you probably saw that Jez Staley from Barclays said that the days of having these huge skyscrapers with 7,000 people in them are probably over. I mean, social distancing, at least while it's in place, is going to prevent that in any effect. You just won't be able to have so many people per floor. But are there any other sectors which you're concerned about, which you think are in trouble, and maybe what are the sectors you see bouncing back most quickly?
Look, it's a difficult call. It's a difficult call to make. One of the sectors that was kept open on a limited basis was mining, and the reason was a very simple one. Our electricity is coal-fired, sure, and we needed the coal, so we needed to keep the mines open. But our mines are deep, and because our mines are deep, social distancing is very difficult. And so the stage was to first open cast mining, and says that if you use those, they are able to maintain social distancing. We already had on one or two of the mines where there was a range of infections of up to 100 people. So it's going to be difficult. I think that the key message here is that there might be a post-COVID economy at some stage. I don't know when that post-COVID economy is going to be. I don't know whether it's a year, 2 years, or 3 years. I don't know. It depends on whether you get a vaccine or a cure. I don't know. What is in no doubt, though, is that over the next 12 to 24 months, we are going to have to learn to live with an economy in the era of COVID. We are going to have to manage an economy in the context that COVID is here, and we are going to have to learn to live with it.
Yeah, no, I think none of us can avoid the fact that we just are in enormous uncertainty, and the next year or two is predictable. But it's going to be a good while before we're all back to some kind of normality as we would have experienced it pre-COVID. I mean, South Africa has always had the advantage of, let's say, being the most internationalized or globalized economy in Africa, with your trade connections to the UK, Europe, Far East, the US, etc., which I think goes to the point you were making about industries that are under pressure. I mean, what are your thoughts about tourism? I mean, logic would dictate that's probably going to be one of the last to come back because of international travel and so forth. Is that a sector that did you see increasing support going to have to be directed towards?
The tourism sector suffered enormously. And I mean, in the region, there are two other countries which are so tourism intensive. Their economies are decimated. I mean, Seychelles and Mauritius, that's what they offer. They offer tourism. And people can't even get there, even if they wanted to get there. And in South Africa, we had also seen that initially it looked like the epicenter of the virus was going to be Johannesburg and Gauteng, but now it looks like it's Cape Town and the Western Cape. Why did we have this thing? The Western Cape is also one province that is very dependent on tourism. When people think I am going to South Africa, they think of Cape Town, they think of Table Mountain and the sea, right? So tourism we're going to have to restart the sector because it's a very important earner of foreign exchange. But also we're probably going to have to restart with domestic tourism. The Minister of Tourism had been having these conversations with the sector, but it's really, really tough. Even as we open the economy now and people are going back to work, people are reluctant to stay in hotels. So people are having to take long drives to go to some of them if they can't do things remotely and so forth. So the tourism is going to suffer in both of its aspects. Business tourism in the form of conventions and all of that, and then of course the leisure tourism of people who would like to explore places. But even as you open tourism Chris, have we cared to look at what is happening in the aviation sector? It's being decimated. I mean, unless these aeroplanes are flying, they cannot earn a revenue. And you just see the airlines all in trouble, and that is going to be the challenge. So tourism is going to take time to come forth, and tourism and the aviation sector are so interlinked. So it's also going to be a function of whether the aviation sector is able to be restarted in good time. But even as we start, and you say that you are reopening tourism, think of it. I mean, you and I used to spend a lot of time on aeroplanes. How do you maintain social distancing in an aeroplane?
Yeah, sure. No, I sympathize. I mean, I think for these aircraft to be looking at the prospect of flying at 50% or 30% capacity or load is horrendous in terms of their potential to make any kind of money and stay afloat. And I mean, it's tough to see how all airlines survive. I mean, clearly there's been an absolute multiplication of airlines around the world, but I think, you know, let's see how that evolves. But you're right, I think it's going to be one of the last to come back. And of course, you have a certain amount of self-censorship going on, in the sense that people will, even if they're allowed to travel and restrictions have been lifted, I think you will find some people saying, well, I'm not going to be the first to get on an aircraft again. If I can avoid it, I will avoid it. And I think you make a very good point about this kind of meeting. It's become so much the norm that I think, at least for the initial stage, probably there's still a big plus to be seen for meeting face to face. Tough to enjoy a glass of wine together over Zoom, but I think we'll find this kind of medium will probably, the embedding of this kind of medium for interaction is probably going to cut down on international travel for a good while anyway, even if it is possible for people to fly. But maybe another question for you about the external side. I mean, how concerned are you about that very link between South Africa and Europe or its external trading partners? Because I suspect you're looking at what happens in Europe and in the UK in terms of their ability for their economies to recover, their restrictions to ease, so that flow of external business can get back to levels that are sustainable. Is that something which, the external side of the economy, is that something which is a particular concern right now?
Well, as we reopen the economies, obviously the external side is going to be important. But for emerging market economies like South Africa, most of us are small open economies, if not all of us. And that means that international trade, international finance are important for our economies. And the sooner international trade reopens, the better. But there is a worry that I have. And the worry that I have is that there had been a movement against globalization.
Yeah.
And some of those voices against globalization seems to be emboldened. And so you are likely to see a rise in protectionism, which is what the world does not quite need at the moment. And we used to think of protectionism in terms of, you can't have access to my market. So it tended to be, you can't have access to my market. But we are also seeing a disturbing kind of protectionism now, where people declare certain goods as strategic or important, and therefore these goods cannot leave our shores. You saw it. I mean, Europe was not particularly exemplary. There were countries that were talking about restricting the export of protective equipment, which basically meant that it becomes difficult to curb these things in emerging economies if the attitude is that, no, we need this for ourselves first. And even as people talk about finding a vaccine, it also depends who cracks the vaccine. I mean, there are leaders who have come out and said that, no, sorry, if this vaccine is cracked, it's a global public good. But that does not stop some presidents of some countries that if it is their country that cracks it first, that they will say, my people first. And I worry that in so doing, we might just be losing our humanity.
Yeah, no, I mean, that has been a bit of a disturbing debate. It's kind of us first, if we happen to be whatever the country might be, if we happen to be the country that the COVID vaccine, that the population or the people of that country will get the vaccine first. I mean, it's a little bit of an unfortunate debate. But I think what is good is that some of these, apparently there's something like 100 vaccine developments going on around the world. What is good is that some of these, like the Oxford trials that are going on now, as you know, they've linked up with AstraZeneca. And the idea is that they will be able to, if the virus vaccine proves effective, that they will very quickly be able to move into the production of hundreds of millions, if not billions of doses. So hopefully if that sort of connection is successful, they'll be able to get the vaccine out to a wider chunk of the world. Lesetja, maybe something a little bit about the cost of this, because clearly for developing markets like South Africa, although you and I have often thought that South Africa should have its own category, but obviously in terms of supporting the SME and supporting the economy back onto its feet, do you have any concerns about your debt to GDP ratio and how you see that evolving? I mean, is it affordable for South Africa, do you think, as we sit here, given the fact that we can't predict exactly how this evolves over the next 2 or 3 years?
Look, as a matter of course, we do not comment about fiscal policy. But in this environment, what we had faced was that we saw a dysfunction in our financial markets and we started to do bond purchases. And as we were doing the bond purchases, there were louder voices coming up in South Africa that says that you have got to do quantitative easing. There were voices that were saying that, well, government can't afford this interest bill. Why doesn't the central bank just lend to the government at 0% interest? Yeah. And how have we thought about this? Firstly, was that our bond purchases had nothing to do with trying to affect the shape of the yield curve or to try and push the yield curve lower or anything of that sort. It was to get the financial markets to function as part of the mandate of the central bank, one of which is to oversee the financial system and make sure that there is resilience in the financial system, and that is what we ended up doing. But let me also say that there is a limit to central bank purchases, especially if you are an emerging market. It's okay for the US to embark on massive QE when they are faced with in very extremely low inflation and where their interest rates are close to zero. It's okay for the UK to talk about do quantitative easing when they are faced with that similar situation. It's okay for the European Central Bank to embark on quantitative easing when euro area inflation was like 0.1 or something like that, and that at some stage even threatening to go negative. And it's okay for Japan to do it because they had faced deflation, and so they ended up doing that. All of these countries can do these things with the knowledge that their currencies are reserve currencies. And because their currencies are reserve currencies, people will continue to hold them. And so even as the US was embarking on quantitative easing, what you saw was people running to the US saying they are running to the safe haven of the dollar. That is not a luxury South Africa has.
No.
So we can go in and try and get the markets to function, but you can't embark on a massive quantitative easing when you do not have a currency that is a reserve currency. Secondly, is that our inflation has declined, but we still have inflation. We still expect it to average 3.6 this year. And our policy rate is at 3.75. We are almost getting to neutral in terms of real rate. And so unless inflation declines significantly further, the ability to provide further monetary easing is limited. There is still scope for us to continue to support the economy deploying our tools, right? But it is not an unlimited space. That is what the point I am trying to make. And lastly, given that we're not a reserve currency, massive QE will eventually find itself into the foreign exchange market.
Sure.
People will find that it is cheaper to create foreign exchange that way if there are just cheap or free rent coming into the market. And what you might then end up seeing would then be a depreciation of the currency, which could then reignite inflation and all of that. At the moment, it is not our worry that we will have a surging inflation over the next 12 to 18 months. Part of it being the prudent stance that the central bank has taken, and the fact that the currency actually recovered over the past month suggests that the steps that we have taken have been seen to be prudent rather than reckless.
Absolutely, and I think you mentioned the banks, etc. I mean, I think one of the great strengths of the South African economy has been the banks and the regulation of the banks. I mean, even through the 08-09 crisis, the banks in South Africa coped very well. And I think the regulation since then has left South Africa with a very sound and well-capitalized banking system. So I think, as you said earlier, from a financial point of view, one would guess that the banks are in good shape. Clearly, there will be some suffering because of, as you were mentioning, the sectors that are going to be under stress. But at least South Africa is sitting with a bank system that has a lot of fundamental strength, good capital ratios, and so forth. So I mean, that's quite reassuring. Maybe just a sort of final question from my side. Just looking forward a little bit here, are there any particular lessons that you think have been of interest during the COVID crisis to date? And do you have any other thoughts on what the post-COVID world is going to look like for all us citizens of the world?
Well, I wish I would know what it would look like. But lessons we have learned, very valuable lessons. The first lesson for me is that building policy buffers is very important. The countries that were able to respond with fiscal policy and with monetary policy were those which had the policy buffers to do so.
Sure.
And you had raised the question, for example, about South Africa's debt. Getting into the 2008 crisis, South Africa had net debt of 23% of GDP.
Sure.
So there was the policy buffer. We got into this COVID crisis with debt to GDP over 60%. Based on the Treasury's own projections, debt to GDP could easily get to 80%. And if it gets to 80%, questions have got to be asked. Should you be hit by a new crisis with debt to GDP at 80%, would you be able to respond? Sure. And the answer is that, well, you might be able to respond, but that does not look like that is the option that you have. You will not be able to respond with a massive stimulus. I mean, the fiscal stimulus, the stimulus that was provided now to respond to COVID was just about 500 billion rands. Truth of the matter is that in 2008, we were able to respond with close to 1 trillion rand.
Yeah.
And the reason for that was that we had the policy buffers. And those policy buffers, from a central bank perspective, it included us having inflation contained to where we wanted it, which was closer to the midpoint of our inflation target range. So inflation was below 4.5%. So that gave us the scope to be able to, that was one policy buffer. The second policy buffer from a central bank perspective had to do with the regulatory capital and the liquidity that was imposed on the sector, and the buffers that were kept by the sector above the regulatory capital, and the liquidity buffers that. So we were able to release that. And thirdly, that because we have had such a deep financial market, and that government had always financed itself in the bond market, when there was a dislocation in the bond market, the central bank was able to deploy its balance sheet to get the financial market to work so that government can continue to fund itself. So that the buffers become important. The last one is that even in the private sector, the building of redundancies is going to be important. We're going to have to revisit the just-in-time models, because as it stands now, we are running a just-in-time model and the global supply chains are disrupted in this manner. Your business is under serious risk. So you're going to have to build redundancies, and governments are going to end up having to build redundancies. I mean, how did the whole world suddenly realize that they do not have enough protective clothing and equipment, and we had to. So we are going to end up having to build redundancies in so many different areas, and it's going to be the norm. And these things come at a cost, and both the public sector and the private sector would have to build redundancies in order to prepare themselves for a next crisis. And lastly is that in South Africa, we have seen one of the criticisms of the South African corporate sector has been that the South African corporate sector is sitting on huge cash balances.
Sure.
And the way in which we have always said that when they are sitting on cash balances, it might be reflection of confidence, and that if you restore confidence, this cash would be deployed. One of the lessons now is that the businesses that had thin cash reserves got into trouble very quickly. Put simply, there is no business that can go bankrupt because it is keeping too much cash. And so the narrative that we have had in banking and in financial markets, which said that if you are sitting on cash, you have got a lazy balance sheet, give the cash back to the shareholders and all of that. Now, when you need the shareholders because the business is in trouble, the shareholders is exactly the time when they themselves would not be in a position to place capital into businesses. So, buffers, building redundancies in both the public and the private sector, that is, for me, the biggest lessons from this crisis.
And in fact, I'm sure you've seen the same effect in South Africa, but in the UK and Europe, and you'll recall across the last 10 years or so that many of the corporates have set up these huge or substantial backstop facilities, which usually are priced very aggressively and are sitting there, so partly to back up CP and partly just as a resource for a rainy day. And what's actually been happening in Europe is that corporates are drawing down on those facilities, which of course was never expected. They really were emergency facilities. Well, I guess this is probably in that category, and they're putting that cash on their balance sheets again to increase their debt levels, but they're increasing their buffers and the ability for them to deploy cash in their businesses. Of course, it means the banks are lending more, but I guess that's one of the circumstances where the strategy is playing out well, in the sense that those funds are there to be taken down. Let's end our piece there, Lesetja. I mean, thank you very much. That was terrifically insightful, as always, from yourself. So really very much appreciate the conversation, and I look forward to meeting you face to face at some point before we're not too much older. But listen, thank you very much. We really appreciate your taking the time with all of us. Can I pass back to Sharon, and let's see what questions we have generated from the audience that's on the telephone. Thanks.
Thank you very much, both of you. That was unbelievably insightful. Thank you, Lesetja, for some of the input and content that you've given us. I'm going to try and pick from the many, many, many questions we've got here, some of the topics that you probably haven't covered. So for those participants where I have not picked up your question, I apologize. They're more than we're going to get through in the 20 minutes we have got left. One question that is interesting here, and that's picking up on your comment a moment ago about building buffers, building redundancies within the system. South Africa has spent a lot of time trying to build a savings culture, not necessarily that successfully. How is that going to now impact the education and the support to the individuals in South Africa to build a savings culture, which they now understand is needed, but out of a place where they are now?
Yes, I thank Sharon for that. That is always going to be a big challenge. South Africans do like spending, but when you talk of savings in South Africa, South Africans are mainly contractual savers. So they save via unit trust, insurance policies, and those kinds of things. But I can tell you that from a macroeconomic perspective, at the moment, what the economy needs is not for people to be saving now. We need people to spend so that demand can actually keep expanding. And what I didn't say to Chris when we talked about the lessons learned is that one of the things that came, which was shocking during this period, we actually found that people were worried about the virus and how long it's going to be. And so you actually saw a resurgence in a savings culture. So people were beginning to once again save in the middle of these things, which is the time when we wanted them to be spending, and they started to be saving because they got shocked by the virus. So yes, under normal circumstances, you would like people to be saving, but at the moment, what you would like to have is actually people spending so that you can get demand going once again in the economy.
Following that train of thought, there's the conversation around sustainability of economies and the supply chain, which you've made reference to. Two questions here. One is in what is the support available going right the way down to the base part of our supply chain, which is agriculture, for example. And the other question is around the Africa focus that you alluded to a while ago about protectionism, and Africa's got to become totally self-sufficient and not going to trade with the world. Could you just help us both on those sustainability issues, because they're coming from two different perspectives, but are really, really critical?
You know, we will be sustainable on our own is something that in economics does not quite work. We call it autarky. And as we have realized, even during this crisis, no one has got everything that they need. We need to trade with each other. And Africa has not quite been trading with itself. And so there are immense trading opportunities on the African continent. And I do not think that as Africans were opening up for trade, they were saying that, well, we will trade with ourselves and forget the rest of the world. The rest of the world needs us. We have got the resources that they need here, but we also need them. We need the access to their technology. We need access to their finance and so forth. And so kudos to the architects of the African Continental Free Trade Agreement, because that's what Africa needs. You need an Africa that is at peace with itself and occupying its rightful place amongst the communities of the global community. And that is what is required. And as it so happens, most of the time, you will find that politicians come with these big ideas, and these things must be implemented. And what we did from the central bank perspective was to say, all these trades on the African continent that must take place, will have to be settled. Somebody must pay. How do people pay? And what Central African central banks did was to launch payment platforms. So in Southern Africa, we have got a SACC RTGS, which does settlement of trade in Southern Africa. It turned out to be very, very useful. It came into effect in 2017, and since 2017 has actually cleared up to 12 trillion rand of settlements. And that for a small region like ours, that is a significant amount. But what we then established was that there is a settlement system in East Africa, there's a settlement system in West Africa, there's something in North Africa and so forth. And what South African central banks did was to say, let us get these systems to be interoperable so that an exporter sitting in West Africa who exports to East Africa will know there is a settlement system that an exporter sitting in South Africa who exports to East Africa would be able to know that the settlement will be done speedily because there is this infrastructure that has been created by central banks. So Africa has got to trade with itself, but also Africa has got to trade with the world.
Thank you. And it's nice to hear that trade with the world is something that globalization will not come to an end completely. Another question around, some of the economists are predicting a 15 to 20% contraction in the GDP. If that does occur, where could interest rates go? And aligned to that, what is your view on possible negative interest rates in South Africa and or your view on that globally?
The issue of negative interest rates is a controversial one. For emerging markets like South Africa, the talk would be, what is the impact of negative real interest rates? I am not sure that we will get to negative nominal rates.
It's a long way to go.
It's a long way to go. So we still have the space. If the economy contracts, where would interest rates to go? I do not know where interest rates will go. What I can say to you is, if the economy contracts and inflation continues to be muted as it is, and if the economy contracts to the extent you think it would, which I do not quite share, but it can happen in this uncertain environment, we do not know, the central bank will continue to deploy its tools as we deem appropriate in accordance with our mandate. And I must say that if you have a shock of that magnitude, it becomes clear that it can't be monetary policy response alone that takes care of that. And I think that the fear that I have here is that globally, central banks have been seen to be quite effective in delivering what society has tasked them with. And my fear is that we are getting into a situation where we are starting to think that the central banks can solve all of our problems. And I think that society has got to have realistic expectations of what this technocrat can do. There are big decisions that must be made, which involves very difficult trade-offs that society must make. Those difficult trade-offs that society must make are best made by publicly elected officials rather than by technocrats like central banks.
Thank you very much for that. We have a major topic on our agenda here in the UK, which seems to have sort of gone a little bit under the radar at the moment. It's called Brexit. I think we would all welcome Brexit back and COVID to go back to where it came from. But given we have COVID and we have Brexit looming, and South Africa's talking about a international and global supply chain trade opportunities, how ready is South Africa to support the Brexiting process of the UK for both benefits, yours and ours? ours as in those of us here in the UK.
I was about to say, Sharon, what happened to you?
Dear traitor. Sincere apologies, sir.
No. Look, Brexit had adverse impacts on South Africa. Besides the long historical ties, the UK is a very important trading partner, but it's also a very important source of finance. Even lots of American fund managers who invest in South Africa tend to invest in South Africa via their offshoots in the UK. There had been a mitigation, though, in the sense that the trade agreement that the UK and South Africa signed offered South Africa similar benefits to what we had with the European Union. So that means that then South Africa and the UK can continue to trade and benefit from, and have mutual benefits from trade. And that is what we face. And lastly, is that the UK is also an important source of tourism for South Africa. When I was a student in the UK, you know, it's like everywhere you go, there is somebody who knows somebody in South Africa, or who knows somebody who knows somebody in South Africa. So there are all of those ties, and I hope that the world reopens, and then we can have those tourists flocking back into South Africa again.
I think there are many who are going to get tired of UK staycations. So I think there's many wishing that they could get onto airplanes and come down to sunny South Africa by December. But whether the airlines are going to make that feasible or not is another story going forward. One of the things that has been asked is some industries are in a position that they can gain out of a crisis. There's always a silver lining to every dark cloud. And one of the industries that has been mentioned as a possible winner in this kind of environment is technology. And do you feel, from your point of view, that that is feasible? And is there a role for the central bank in that process, or is that up to private business?
Well, technology clearly is a big winner in this, and linked to that is going to be e-commerce. During the lockdown, almost all of the major South African retailers have got some apps. I found no reason to go to the shop even with protective clothes. I order the things that I want on my phone. It gets dropped at the gate, and then I can maintain the social distancing. So e-commerce is going to be a big beneficiary from this, because very soon people would realize, well, if I can do it this way, why do I even have to bother to go to the shop? Which says something about the shopping center owners.
Their risks.
In terms of technology, we have engaged with technology as a central bank, and we have engaged with technology in the financial space, the so-called fintech. And in our approach to financial technology, we have been technology agnostic. In other words, our approach had been to say that we are a central bank, we regulate particular activities, and that is what we would focus on. So if you are a technology provider and you come with a technology that will make the easy flowing of credit, we will only regulate your credit activity, extension activities, but not your technology activities, and leave the technologies to thrive in that space. What we ended up doing was to create an innovation hub in the central bank, and our innovation hub is made of 3 components. We have got a sandbox; people can come and test their technologies there. We have got a regulatory guidance unit, so people have, many of these people who come with technology They are young, they are creative, but they have got no clue about how to work with regulation. And so we provide them with regulatory guidance. And thirdly is we have got an innovation accelerator, that if something comes to us and it ticks the boxes with the regulation and all of that, we could work with you to get this thing to move quickly. But that is all in the financial space.
We have got many questions still to go, which we are not going to be able to address. I have to apologize to many people at this point. We won't be able to get to all of their questions. Lesetja, Cyril Ramaphosa has made statements about resetting the economy, looking at this as being an opportunity for South Africa. Where can the Reserve Bank support those opportunities, and where do you see them being? I know when I was at school, we talked about we shouldn't mine the diamonds and then send them overseas to be sorted. We shouldn't to be cut. We shouldn't be taking our gold to be processed overseas. And that was a long time ago. Where is South Africa in bringing manufacturing back to the country?
Well, I don't know what we mean bringing manufacturing back to the country, because manufacturing has never left South Africa.
Okay.
And we are still South Africa's most industrialized economy. Mm-hmm. But the point is valid. I have a different take on manufacturing and on adding of value to resources. I have a different take. I know that everywhere in the world, governments think of it in this manner. We have got these resources, therefore we must add value to them. But we have got to ask ourselves the question, how come India and Israel have got vibrant diamond polishing businesses, industries, but they do not produce the diamonds, but they are able to polish them? Mm-hmm. And we've got to ask ourselves, when South Africa ended up producing oil from coal, it was not because we wanted to add the value to the coal. It was to try and solve a particular problem. And I can take this further and say South Africa's most beneficiated mineral is coal. So we use coal to produce electricity, we use coal to produce fuel, we use coal to produce plastics, we use coal to produce fertilizer, and so forth and so forth. And we have got to think about these things and where our value add is. We are very good digging holes in the ground. And so when Chilean miners were stuck underground for a month, it took South Africans a few days to dig them out. Because that is what we are good at. Our value is upstream. We are very good at those things. And so we think about these things. And South Africa will have manufacturing, but our manufacturing, yes, we have got these resources, we can add value to that, but South Africa has got so much enormous potential that given the space, people are able to produce lots of other things. I know you do not quite swim in the UK, but one of the things that South Africa has exported all over the world has been our ability to automatically clean swimming pools.
That is true. I miss my creepy crawly. A last question, probably a more difficult one, is the debate around the uncertainty caused by the ANC stating that they would look at nationalizing the Reserve Bank and similar other conversations. How's that going to deploy your mind over the months ahead?
Look, naturally, we do not respond to political parties, mm-hmm. But the debate, that debate is out there, is taking place. So I should not be seen as responding to a political party here. The nationalization of the Reserve Bank is, for us, a non-debate. As a central bank, we have walked away from it now. We have said, let that debate take place in Parliament. Do whatever you want to do with it. And maybe my compatriots have learned from the bad behavior in the UK, because you chaps in the UK nationalized the Bank of England at some stage. But for us as a central bank, what is important, the institutional setup in terms of the constitution. So whether the central bank is nationalized or continues to have private shareholders, if you do not interfere with the constitution, for us as a central bank, we will just continue to operate in accordance with the constitution. We are a creature of the constitution. And so that is not going to occupy our mind really going forward. What would occupy our mind going forward, though, is that globally there is a debate about the role of central banks. And that debate must be allowed to continue, because if you are living in a democracy, you must understand in a democracy there will be contestation. There will be a contestation of ideas. There will be a contestation about institutions. There will be a contestation about the role those institutions actually play. And so in history, you will find that those things happen. And that debate about the role of central banks, I need to underscore, has not been held by central banks in the aftermath of the global financial crisis, saying central banks are the only game in town. Because you see, if you are the only game in town, then you will be expected to solve everything. I don't think today when you speak to central bankers, they will talk of the central bank being the only game in town. And I think my worry is society is having unrealistic expectations of what central banks are capable of doing. We have been tasked with particular responsibilities with respect to price stability and financial stability, and as central banks, I think we have done that well. And I think that for society to expect that the central banks can go and do the others, you might just set them as up to fail, because these are areas which must be dealt with by other institutions. Yeah.
Understood. Thank you so much. We could carry on forever. There's probably about 20 questions and a whole bunch more coming in from other sources, but we are going to have to stop. Our time has now come to an end. Chris, I'd like to thank you very much for the conversation you've had with Lesetja. Thank you very much, Governor. It's been very, very insightful and very interesting. The couple of takeaways that I picked up from your talk with some of the points you made right at the beginning is how South Africa got a double shock, which is probably more than most countries had to deal with. And the risk-based reopening of the economy that the country is having to take, and therefore how you are going to be managing those risks as they emerge, as the economy unlocks. I think the preparedness that the Reserve Bank had has been the saving grace for the country in many ways. And let's hope that going forward, the rating agencies will respect what has been done by the central bank for the economy and for the country. Thank you very much, sir. Thank you very much, Chris.
Thank you very much. And hopefully there will be much more interest. And since I don't have to fly to the UK, I think that we must see whether we do not schedule another one at some other stage to continue the conversation.
I'll be the first person to pick you up on that one. Thank you very much, sir. And to all our participants and members of our board, our advisory board, our EXCO, our members, and all those of the public globally that have joined us today, thank you very much from the Chamber of Commerce. And thank you very much, Governor.
Thank you.
Bye-bye.
Thank you. Bye-bye.